Hi there, welcome to Kneppy Invests. I'm always on the lookout for companies to put on my watch lists. And over the past year and 3 months, we've seen a plethora of companies list on the ASX. It's been a great time for IPOs. And in today's video, I am going to feature a company that listed on the ASX in July 2020. This is actually a New Zealand company called Aroa Biosurgery. This company does have products they are selling, so this is a real business with revenue. However, they are not profitable, are not cash flow positive, and they do have a fairly high valuation. So what I've decided to do is put this company onto one of my watch lists, and we don't see much positive sentiment behind the share price right now. Share price has been going sideways during much of 2021. But if I do see a breakout in the share price that coincides with good positive financial news, particularly if they do become operational cash flow positive and profitable, that could be a good time to take a position in this company. So let's get stuck into it and talk about what actually Aroa Biosurgery actually does. Aroa Biosurgery is a soft tissue regeneration company, and they do manufacture, develop, and distribute quite a few products in the wound care and soft tissue reconstruction areas. Some of their products include Symphony and Endoform, and that deals with foot ulcers, pressure ulcers, and chronic wounds. They've also have, in the soft tissue reconstruction area, Myriad Matrix and Myriad More Cells, and those products are dealing with trauma, tumor removal, general surgery, and inflammatory skin disease. They also do have a partnership with TeleBio, and TeleBio have a product called Ovitex and Ovitex PRS, and they deal with hernia repair, abdominal dehiscence, and breast surgery. And fairly high addressable markets in both of those areas, greater than $1.4 billion US dollars. Aroa Biosurgery is a New Zealand company, so we won't hold that against them because there are many fine New Zealand companies listed on the ASX. And in fact, I'd say a lot of these New Zealand-based companies are high in quality. Yes, I'm looking at U0. But Aroa Biosurgery was founded in 2008 by Brian Ward, and he's also the founder, also the CEO currently. Aroa did list on the ASX on the 24th of July 2020, just after the COVID-19 financial panic. And around that time, we started to see more and more companies wanting to list on the ASX because at that point in time, the indexes were going up. The market was rising. And when you do see the market rising, that's when a lot of companies want to take advantage of a rising market. The CEO and founder, Brian Ward, has a 10% holding in this company. And another large shareholder of Aroa Biosurgery is WH Soul Pattinson with a 2.2% stake, which is quite interesting because I've actually mentioned WH Soul Pattinson quite a lot in the past few months. And I thought WH Soul Pattinson was more of a concentrated sort of fund, if you can call them that. But it seems like they are way more diversified than I originally thought because they do hold a lot of these smaller market cap companies like Aroa Biosurgery. Now, when it comes to the market cap, and any holders, maybe shut your ears right now, the one thing I do have against Aroa Biosurgery is just the market cap or the valuation. $360 million market cap, a share price of $1.06. I would like to see that drop, hence why I asked all shareholders to block their ears. I'd love that to be in the $100, say between $100 and $200 million range. They do have a fair bit of cash, so enterprise value reduces the valuation of this company to less than 300 million. Talk about that in the next slide. And the ticker code for Aroa Biosurgery is ARX. And one of the reasons I am questioning Aroa Biosurgery's valuation of $306 million market cap and $295 million enterprise value, because they do have net cash of $65 million, is just because of the revenue, only $17.9 million in the most recent half year. So these are half year numbers that Aroa Biosurgery did provide in the most recent financial updates. But revenue did climb quite a bit from the previous half year, half year 21. It almost doubled, but we did see a period of time when revenue for this company actually was flat. And I think one of the reasons it did climb was just some of the tailwinds behind this company in the recent times. Operational cash flow negative by $5.8 million and unprofitable by $5.1 million. And again, these are half-year numbers, so highly unprofitable and highly operational cash flow negative. It's fairly high gross margin, 75% in the most recent half year, and that is improving from the previous half year. And again, they do have $65 million of net cash, which does include $20 million of a term deposit. So if you take into account the revenue, we do get a price to sales ratio of 16.5 based off the enterprise value of $295 million. That's a little bit higher if you use the market cap. So just based off the enterprise value and the amount of revenue, even though it is growing, a price to sales ratio of 16.5 is a little bit higher than what I would like to see for this type of company, unless we do see significant growth in the future. And that's what I think the market is expecting for Aroa Biosurgery at this point in time. In this slide, what I'm doing is showing you the first half financial year 22 cash flow numbers that Aroa Biosurgery recently released. I think they released these numbers in November because their financial year finishes in September, so the half year finishes on the 30th of September, which is fairly normal for most New Zealand companies. And if we look at the cash flows from operating activities, they were operational cash flow negative by $5.8 million in the half year. They also spent $2 million in capital expenditure. But the reason why this company is now flush with cash is because they did do a significant cap raising during the half year. In fact, they raised $50 million, which would have been maybe about 50 million shares. So this was dilutive to current shareholders. But they do need to raise that cash because they are bleeding a lot of cash at this point in time. One of the reasons I don't like, or I prefer the quarterly cash flow reports over the half yearly and yearly reports, is because they break down the costs in the quarterly reports. For instance, they break it down into research development, product manufacturing, operating costs, advertising and marketing, so on and so forth. But in the half yearly, yearly, they don't do that. But so I've just included the September quarter cost breakdown on the right here. So just so we can see where they are spending most of their money. And by far the biggest expenditure for Aroa Biosurgery is staff costs, $5.2 million in the most recent quarter, significantly dwarfing the next biggest expenditure, which was product manufacturing and operating costs at $1.9 million. More than likely, they do have a lot of staff, a lot of salespeople trying to sell their products to the world. That's the most likely reason. Haven't gone to too much depth right now. And I've just included the reconciliation of cash and cash equivalents because in some places you will see they only have $45 million of cash. That's sort of a half truth. They do have $45 million of cash, but they also have a term deposit that has $20 million, and that is cash equivalent. So whenever I say cash, I'm looking at cash and cash equivalent, and that is totaling $65.3 million at the end of the September quarter. Now let's have a look at the receipts history for Aroa Biosurgery. We only have 5 quarters of history because they listed on the ASX in July 2020, but the trend is starting to become apparent with this company. The trend is up. But if we didn't have the last quarter, that trend as an uptrend would be under question because we had seen receipts actually go down 3 quarters, actually 2 quarters in a row. But a sudden spike in receipts from the June quarter to the September quarter from 5.3 million to 8.6 million means receipts have almost doubled over the past 5 quarters. Now, maybe there is a bit of seasonality here with Aroa Biosurgery. I don't know, but there is a good trend starting here. I'd like to see 3 more quarters to confirm that we do have an uptrend in cash receipts, and that's exactly what I want to see for an investable company. There was a little bit of excitement in Aroa when it listed on the ASX back in July. Share price listed about $1.30, and then a few days later, the share price reached $1.75. But during the rest of 2020, the share price actually did fall all the way down to a low of about $1 towards the end of January of this year. And ever since the end of January, the share price of Aroa has been trading in this sideways channel, trading between $1 and $1.25. And every single time the share price gets to about $1, we do see the share price rebound upwards. That has happened 4 times in the past 11 months. And every single time the share price gets to $1.25, which has happened 6 times in the past 11 months, the share price then retreats. And recently, 3 days before I'm doing this video, on the 9th of December, the share price tested $1 and looks like it might be rebounding again. At this point in time, I think it's just maybe traders trading Aroa. So they're buying when the share price gets to $1 or near $1 and selling when it gets to $1.25. What we want to see, or what the long-term shareholders of this company want to see, is a share price move through $1.25, which is a resistance level on some strength. And when I'm talking about strength, I'm talking about good volume. And the best way to do that is some good news from the company, preferably some good financial news. At this point in time, I have kept or leaving Aroa Biosurgery on my watch list, and I'll be just waiting for some good announcements from the companies before I even think about taking a position in this company. That's all I have for this video on Aroa Biosurgery. You don't know how that has been for me to say those 2 words all throughout this video, Aroa Biosurgery. For some reason, I'm having trouble saying those 2 words. So I hope you've enjoyed this video. If you do know this company a little bit more than me, I'd love to hear your opinion on Aroa Biosurgery. So leave your opinion, your thoughts, any questions in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.